paying $60 or $70 or $80,000 in taxes on the sale of the property was not ideal.
The kitchens, the bathrooms, OMG. It was disastrous.
In a median income, below median income neighborhood, and we were asking for top of market. So we were just out of price position.
It doesn't matter how much you think you have done, you can always do more. From the CFO's perspective he's saying you are over budget.
So this is a great lesson. Stick with the plan until the plan doesn't work anymore. We've actually tried to sell it 3 times and haven't been able to successfully sell it.
What we know now, or if we could have predicted exactly what would happen, which nobody really can, this is how it went down. Welcome, everyone, to the second episode of the J&R Podcast. We're so excited you tuned in today, and we're going to share all about what not to do in a renovation in a down market. All of our regrets, what we wish we would know before running into this project. So let's get started. Hi, Joshua.
Hey, Raquel, how are you today?
Very good. Well, we are in the midst of yet new renovations as we speak. But today we are going to talk a very special one to us where we have lots of lessons to share with our listeners.
Yeah, absolutely. I think that today's a great learning lesson for whether you're working with your spouse or working with a business partner or just working with yourself. Lessons learned about making decisions, having plans, sticking or deviating from plans, and what that impacts and how that impacts your bottom line, and ultimately how do you recover. So I think that I learned a lot in this one. I think you alluded to the things that we're working on now. This is fairly lightweight. What we're doing now, this is just turnover, which is very different than what we're going to talk about today with this particular property in Round Rock.
Definitely. So let's begin by sharing with people, why should anyone consider buying Round Rock, and what first led you to invest in Round Rock in the first place?
Well, I mean, I think that's a great question. Really, it's just about common sense. At the time, this is our oldest property. We've had it for more than 18 or 19 years. I actually originally bought it. I was working at Dell at the time. So close to employment. It was bought purposely to live in for a short period of time and convert into a rental. It was acquired at that time. So it was a very traditional 3-bedroom, 2-bath. At the time, it was just me and my son, who was young, and it was close to employers. And so it was a prime area that I felt always would be a good place for a stable rental market. Originally, I bought it actually to pay it off so I could pay for my son's college. That was the original plan. So I had that intention from the very beginning. And as we've seen, Round Rock has continued to grow and expand, and all of the suburbs around it, very different, 20 years ago than it was today, but still thriving at the time. And so that's why we entered that market.
Definitely. And if you are moving to Austin and want to know more about Round Rock, follow us here, subscribe and like to our channel, and I'm going to tell you all about Round Rock, one of the safest places to live in Austin, and has been voted one of the #1 cities to live in Texas. So check out Round Rock if you are moving here with your family and you want to know more. So this property is very interesting because initially what we thought we would do with this property is a 1031 exchange. Shall we share what a 1031 is for everybody to know, and even why we got into this process?
Yeah, so a 1031 exchange is a fairly straightforward, but it basically is a way to defer capital gains from properties. It's a treatment to where you sell a property. Before you finish that sale, you basically locate multiple other properties to take the money. You never actually take the money from the sale. You have an intermediary. You buy the next property. They take those funds and they use those to apply to another property or a like kind property. It can be different properties. It could be a residential property into commercial property. It can be a different type of investment. Talk to your CPA. They know more about it. There's actually multiple versions of of 1031 exchanges. What we were talking about doing here was a more traditional, straightforward 1031 exchange where we sold the property because we had it for a long period of time. So we had depreciated a lot of the cost basis. So we were looking at a fairly substantial tax implications. Paying $60 or $70 or $80,000 in taxes on the sale of the property was not ideal. We were looking forward to using that extra money to buy a larger asset. So that was our original goal from that. So, that's a little bit about a 1031 exchange.
Yeah, so thank you for that explanation, Joshua, on the 1031 exchange. It's a great vehicle for people wanting to stay in real estate, are holding properties for a long time, and then want to.
Well, basically, it's a way to save money on taxes.
Sure, sure.
That's really what it is.
Absolutely. Yes, put simply, right?
Yeah.
It's a wonderful vehicle. And what we did at the time, we had a tenant living in for over 10 years. We said, let's put the property on the market, being tenant occupied. What happened then?
Yeah. This property, we've actually tried to sell it 3 times and haven't been able to successfully sell it. So we've tried to sell it as a tenant occupied to another investor. And so I guess it's been over 2 or 3 years. We've tried to sell it 3 times. And so everybody knows what's going on with the market. So, ups and downs and those things. So weren't successful. The property had some deferred maintenance because of or it needed some repairs. It's probably deferred maintenance is probably not the right term to use in this context, but needs some repairs. But we had a long-term tenant, and we thought another investor would like to have that. They had multiple children in the property and had lived there their whole lives. Several of the children. And so the renter was enthusiastic about staying in the property, and we thought for a long-term hold investor, this would be something that would be interesting. We were unsuccessful at finding a person that wanted to take the property at that point. So after having it on the market for 6 or 7 months, we pulled it off of the market, and then we started to look at doing a different strategy. And to give some context about the decision making around that. So usually, we're long-term buy and hold investors. We haven't done flips in a long time. And so this is our strategy. But when we're actually running the numbers, because the house is older, it started to collect a lot of maintenance issues. So as we started to look at, is this actual property being profitable over a period of time, we continued to fundamentally just lose money on the property every year. There would be substantial issues with an HVAC here or a roof or plumbing or various other issues, which was pretty typical of a property that's in excess of 30 something years old. So great property, but then it started to become something that we couldn't overcome with the rent. And so that's what helped us drive to the decision of moving on to another property and another asset. So that predicated the start of this. And then we did what I described before, which was let's try to rent it with somebody in it, because we thought that added value for another investor. Since we weren't going to remodel the property, they thought we could sell it to them for cash flow with a locked in renter, because we found value in that, but that was unsuccessful. And this is when the market started really to decline. So we had some market forces against us, some headwinds. And so it was a great lesson. We didn't do anything really other than move the property, back, just continue to rent to the same person. So
Yes, well, I actually want to take a step back and talk about the process. So basically, we said to the tenant, give us the property back, right? This was June timeframe. And we were in Costa Rica enjoying some vacation when we said, let's define the plan. We will invest in paint, get the house freshened up, get it all clean and looking new, and put it on the market. Let's do our
yeah,
best and see what happens.
yeah, and I think that was actually the second time. So the first time we tried to just sell it with a minute, and then we actually had a contractor come and look at the property. And I know that you and I have a different vision of what good enough looks like to sell. And the contractor communicated to us that, hey, 10 to $12,000, paint, light updates, uh, you should be able to sell the property.
That's
And
right.
we did have a lot of, because of the neighborhood and the price point, there was a lot of interest from owner occupants on the property when we originally listed it. So we made the decision in Costa Rica to take advice from a third party and say, okay, well, a $10 or $12,000 investment to turn the property over and liquidate and move to a newer asset would be a good decision. And so, yeah, so that was part of, running, going to the renter, telling them, hey, we appreciate you've been there a long time. We'd like you to move out. We're not going to renew your lease. We told them 6 months in advance, and they understood. And so we started to prepare the property for them to move out and to sell.
Yeah. Yeah. So they moved out. We show up in the property now on June 1st and do a walkthrough, take a look at the work. We had a contractor by our side then, and I look around and tell you, as your realtor, this is not going to work. The kitchens, the bathrooms, OMG, it was disastrous in my humble opinion. And it led us to start a new set of decisions then to do smaller replacements and remodel, which led to a much bigger project then.
Yeah, I think the one lesson here is, I would say in hindsight, stick with your plan. What happened was we went in and we felt, um, there was a feeling that it was just overwhelming. How, the tenants had done a decent job with the property, but internally it wasn't made. It was, older cabinets, older everything. And after them having 3 kids, it's definitely had shown wear. And when you saw that, you're like, I can't sell this. And so that immediately changed our strategy to go from, let's call it a light update, paint and baseboards and fixes, to eventually a $57,000 remodel.
Wow. We would have never projected that or expected that. And the worst of it all was not even the funds we had to come up with. It was the fact that because we didn't plan, and at first we said, paint is all we're doing, we scheduled the painters. They were there week one. And now, as we see this house, that the bathrooms were not great, not a wonderful experience for anyone to take a shower in. The kitchen was pretty decent. And we called our contractor as well to come in and said, now give us a price for the bathrooms only and perhaps the kitchen. And then we started with paint already going on while we were trying to make decisions.
Yeah, I'll tell you, this is exactly not how to do a remodel 100% of the way. You never go in without a plan. You never go in without a reasonable estimate for overrun and cost. We did it completely backwards. We had no plan to go execute a, $50,000, $60,000 remodel. And so we were receiving information and making decisions on the fly without fully understanding the impacts of those decisions. And that was a great lesson that we learned. We were fortunate we had the means to execute the project, so it wasn't something that we were running into an issue from that perspective. But I think that's also something for people who are looking to do this. Just because you have the means to do it doesn't mean you should do it. And I think that's a really wise lesson that we learned along the way, because once you get into the project and you have walls opened up and you have, bathrooms being torn apart and counters being torn out, you can't stop, because you can't sell the house with half torn down kitchen. And so those are things that, planned ahead, we could have been in a much better position. But since we reacted, I would say, this is the first time we had turned over a property like this to this extent. We treated it where we were going to go try to get into the top of the market with building, investing in the property. And there's also lessons that we learned from that. But
Yes, yes, totally. And it's worth mentioning that at that point, too, we had even considered moving into this property because one other way that you can not do the 1031 exchange is now you receive the property back as your prior investment home and you live in it for 2 years and you're also exempt from those capital gains. So at first, when we thought of remodeling, we said, let's make it really nice because we may live in it. And those plans changed. We were living Kyle then.
Mhm.
And we said, let's do it for the market. And to your point, it all started going backwards. Now we have contractors coming to demo and tear down a bathroom when the painters are in the house making it all spotless. And it really created a backward flow where now paint had to be touched up at the very end. And it also led into bad flooring put at once. And let's now change the kitchen as well. And the numbers kept going up and up from there. We hope you are enjoying this content. Remember to like, subscribe, share, and help our channel. And if you are moving to Austin or Boston, make sure to get in touch with us through the links on the description of this video or reach our website with all resources and information on how to get started with our team serving you in Massachusetts and Texas.
yeah, I think that the number one lesson, a couple of key lessons from this type of exercise. One, have a plan and then take your budget and add about 25% to it. Start there. And then the order of things. So, as Raquel alluded to, you don't have painters come in when you're tearing floors out the next day. When you have wet paint, you don't have cabinets torn out after the house has been painted. You don't. And this was all predicated because we changed our plan in real time. And sometimes you have to adapt to that. But I will say that like, we won't ever do that again. And even if we got into a place and we felt unsure with our current plan, we would attempt to execute fully that strategy. And then if we had to go revisit it after months, we wouldn't make a knee jerk reaction and just start a whole new project. So we learned definitely from that. And then, the consequences of that decision fundamentally changed because we were in a market and we don't do a lot of flip because we do a lot of long-term holds, but we didn't look appropriately at the ARV. So after repair value is what that means. We didn't look appropriate at the ARV. So we were really stretching the neighborhood for the size of investment we were putting in the property. So we overbought some of the materials because we treated it like our own stuff instead of like what was fit for the neighborhood. So we overran on expenses, on costs for the materials we used. I promise you that's the nicest bathtub in the entire neighborhood. There won't be another nicer Moen bathtub in that entire neighborhood that exists, but that's okay. It's a lesson that we learned. And so and then that put us into a different predicament because now we have a property that's over improved for the neighborhood slightly. Um, we even put real wood floors in, which we got a great deal on the wooded floors. But these are the things that you learn, and you put yourself out of range in a neighborhood where we were at the top of the neighborhood. We didn't have the highest square footage. We had a lower square footage property in a uh, median income, below median income neighborhood, and we were asking for top of market. So we were just out of price position, and that in a market that we were in with a lot of headwinds, that didn't set us up for a great set of success. So I think what we learned from that is, you adapt along the way, but we also became very clear about an exit price. So we came up with a conclusion that said we won't take any less than this dollar amount. And if we do, we will just take the house and turn it back into a rental. So the set of decisions here is don't lose money that you have to, and then also do what you're best at. So we know how about managing long-term rental properties. We have multiple properties that we have long-term renters in. So if we got below our point where we felt comfortable for our net sale, what our cash receipt was going to be, we made the decision, as frustrated as you were, that we would not take less than a certain amount of money. And in order to recoup our funds that we put in, we would just put another renter back in that property. And the great thing was we had lots of showings. We had lots of things. It was the nicest, probably one of the nicest, if not the nicest interiors in all the neighborhood. Fresh paint, everything was done, but it was just out of reach for most of our buyers. And there was also alternatives, a lower price point that were bigger, things of that nature. It was just in a difficult situation for us. So
Yes, yes, I appreciate you sharing that. And looking back today, right, in hindsight, if we knew what we know now, or if we could have predicted exactly what would happen, which nobody really can, this is how it went down. In June, we were at the peak of the market. Here in Texas, historically, June are the highest prices for you to buy a home. And so we were at the very peak then. If the house was ready at that point, June 1st, we could have sold perhaps at that point for a lower price value without doing a remodel. So if I could go back in time, I would have listed the house as is, see if we would have gotten an offer that was reasonable and fair. But now, because we went into this remodel without planning, we were also at the mercy of timing of our contractors that were available to do the work, different people. And I was the general contractor, meaning the general manager coordinating everyone. And so we had to work with their timing and what they could give us. And so now we're into 2 months of a project. The house was ready in July,
yep, end of July.
end of July. Now, when we go to the market, we had missed the peak. Interest rates started going up. A lot of availability was there for buyers,
Hmm.
and people were starting to feel uncertain due to the elections. And so, from that stage forward in August,
Hmm.
the sales started declining here in Austin and specifically Round Rock. The properties that were moving were more in the $300,000 mark, and therefore we were overpriced now for this neighborhood. And we had lost peak of the season, the high activity in the market. You get into the fall with a project like this, things were cooling off, and now the alternative, what we had to do to turn this property around.
Yeah, I'll say that if we would have done our first project, and we didn't have all of the money wrapped up into it, we probably could have gotten rid of the property. Because so this is a great lesson. Stick with the plan until the plan doesn't work anymore. And you know you we if we look at this, we we're fortunate. This house is free and clear. It has no debt on it, and so we could have taken any offer we got and exited the property. But because we were clear about our exit strategy on the property, the dollar amount we were willing to take, that actually helped us define what our next set of decisions were. And so it's critical when you get into one of these things that you have that conversation beforehand, because it'll never work out the way you think exactly. So we made lots of mistakes along the way, doing everything backwards, having to redo it, taking longer timelines, not having being planned properly. And we could have done compressed our timeline and probably saved cost. That's okay. We worked through that, and then we made the decision to rent. And the interesting thing about going back to renting the property that we had already been renting for over a decade and moved a renter out saying we were going to sell it is that we were able to raise the rent over 20% a month. So 20 to 22, 23%, somewhere in that area. And so, the silver lining on this was that we did improve the value and the yield of the property. We repaired a lot of the issues that we were running into. So we mitigated a lot of our deferred maintenance or things that needed repair. And fortunately, in this case, we actually found a renter who likes the property, wants to buy the property from us eventually, which is always good, and gave us an opportunity to recoup some of our invested costs that we had in the property. So even though things went awry, didn't follow a plan that we had, in life you make lemonade out of lemons, and so we held to our guns and we didn't turn down a way of making money. And so we moved to long term rental again, which we were very familiar with, put a great couple in, highly qualified, and we increased our cash flow on that property by 23% a month. So all things being equal, it didn't, you know, it's not the exact ideal outcome. So I think on the third or fourth time, I think it might be the fourth time we're going to try to sell the property over the last 3 years, we'll eventually get rid of the property and be in a better place because we built value in the property in a different way and yielded value in a different way. So
Yes, the property came out amazing. Every area, every material was picked with so much love, and I tried my best to pick out wonderful quality materials and with some discounts to wonderful stores here in Texas where you can buy all your materials. Now, before we finish, Joshua, we have to share about this because this remodel almost broke us before. Despite the fact our marriage is so strong, we had extreme differences here in how we treat projects and the process. And while the remodel is happening, we are very different in how we handle that.
yeah,
So,
absolutely.
for me, early trips, going to the stores, being there with the contractors, checking the work, being available, decisions need to be made, and things need to be changed and adjusted. And I enjoy that part of
Mm.
the process and seeing everything come together. And for you, it's very different.
Yeah, absolutely. I think this is in any it's more difficult in a husband wife relationship potentially. I mean, business partners and other things have different perspectives, but Raquel, you and I are really different. So I operate as a more like an administrator. I hire people who have expertise in areas, and I trust that they're going to do that. And then I check at the very end, and if it's not done right, then we reconcile. You're much more of a hands-on, so you literally went to the property every single day for 5 weeks. You actually set up a desk in the property to be with the people, which um, your attention to detail and quality is very different than mine. And so, I value that highly, but also it takes a large toll when I'm wondering, why are you leaving again today? They're just going to paint the same wall. And you're like, no, I have to be there because if they need to make a decision, I have to be there to make the decision for them. So understand what you're getting into in these kinds of things and have a game plan before you start because you, when you're operating as a business partner and you're having a conversation about making decisions financially, those are very different than making decisions emotionally as a husband and wife. So those don't always they they don't come off the same way to your business partner as they do your wife. And whichever role is being played at that moment can certainly cause communication challenges. So I think
Yes,
I
yes.
think that
For sure. We had lots to overcome then and
mhm.
get into agreements. And I said, I'm good being there, right? Working along the team. And Joshua was ready to pay the bills when the contractors were
So,
done. So we had a good plan.
yeah, I think that one thing I'll say is that operating as our CFO in that regard is very, very, very challenging because you manage budgets and you manage things, and then when everyone's an override and more and more and more, things can get out of hand really, 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 really easily. And so I think having those honest conversations and trying to take an opportunity to prepare yourself. I think for us, and when anytime you're going to do one of these projects, especially on an older property, you don't know what you're going to find when you open the wall, right? And so you have to be prepared for that. And so that comes to the planning. And as I described in this in this talk, we had none of that done. So it made more and more stress in a situation that could have been less stressful. But at the end of it, we have a property that is in much better shape than it was before. It has much higher quality materials that it was ever built with, and it looks really, really good. And like I said, our rent shows that, and then also people who want to be there and buy it, that shows that as well. So that's just part of the journey when you do when you own multiple properties and you have multiple experiences, and then you do it with your wife. These are all critical.
Yes. And I'm sure the ladies can relate to me where the truth is, it doesn't matter how much you think you have done, you can always do more, right? Oh, the closets were still not done. And somebody walking in the property will say, "Ah, I wish the closets had been updated too, and this door and that door." And so, from our perspective, we want everything to be done. From the CFO's perspective, is he's looking at the bottom line and the spreadsheets and he's counting. Every time I say a new project is being added, doesn't matter if it's $100 or $1,000. He's saying you are over budget already. Stop, no more items here on this project. We have to finish this. And so the good news is we can help you to avoid these pitfalls. Now we have new tools as realtors where we can go predict exact by neighborhood the type of improvements you want to do in your house, whether it's a new bathroom, a new kitchen, or add a swimming pool. We can tell you already how much you're going to spend and how much you're going to get back in that exact neighborhood. So part of what we did was to invest in a neighborhood that wouldn't support all these wonderful things that we did.
Yeah, and I think if you want to summarize the whole story here, there's some great lessons that we'll build on in other podcasts about the lessons that are learned. I mean, we talked about how do you you know displace or how do you exit an investment over a long period of time. We've had this property for a long time. How do you prepare and manage that investment through turnover? How do you prepare a property for sale? How do you then understand what your numbers look like and know when to change strategies? So all of those things were great. Each one of those is an important part if you're going to be investor over a long period of time, because those are all things you're going to face. And that's not the stuff that you see on the videos where it talks about like, oh, you buy money and flip it over and do all that stuff. It doesn't ever work that way. It, the reality is it's not that. The reality is it's the things you never think of, and being able to correctly work together, underwrite your properties, because you're at the end of the day, this is a people business. You have buyers, you have sellers, you have contractors, you have a property that's aging over time. You're dealing with all of these elements that are outside of your control. And so working with and keeping those systems working together is really, really critical. So each one of those we can probably talk about in great detail in different times, but this particular one tested us in a lot of areas of what I call investing in real estate. It's not bright and shiny.
Yeah.
Like everybody talks about like how much money you make and all that other stuff. It's not ever like that. It's a long game that requires you to test yourself in each one of these critical stages to make the best decision you can, and then understand how to react if it's different than what you thought it was going to be,
Yes.
which is often the case. So,
Totally, totally. And the great news and the happy ending of this story is that within a week, we put the property up for rent. We found wonderful people who came to the house and fell in love with it, wanted to rent it right away for 2 years, and said, we can actually look into buying this home. So Joshua said, well, test drive it.
mhm.
If you live in it and you love it, we can sell it to you. They are first in line now, and we're looking into exit and
Yeah,
make a family very happy.
yeah, absolutely. And I think that to your credit, uh, the quality of the attention to detail has helped us to be very, very successful, and your clients be successful on getting a property rented. I think that we've been very fortunate. We typically have our properties, we'll have interest. I don't think we've ever had a property that sat more than 30 days ever. We have, and so that having done this multiple years and dealing with other, I mean, you can look in the market and see properties sitting for rent for months. Um, but our properties, because of the staging and all the other things that you do, the quality, attention to detail, they typically rent even in the worst times of the year in less than a month. We'll have a rent. The property we're working on right now is we had a tenant leave early, which is a story in itself. Not pay rent, story in itself. divorce story in itself. Welcome to landlording. Um, but we had interest in the property. Took us. It's going to be about 6 days to turn it over. That's paint, floors. That's multiple things. But we already had interest. Showings on Monday. People that have already applied for the properties I hadn't seen. These are the types of things because of the way that you approach it. So there's a lot of value in that for other people. That that's one of the core things. If you're going to do, you need to be good at. If you're a long-term landlord, we always have focus on having a really high quality product for our people because we are looking at them. We want to treat people like we would want to be treated and serve them, and so we have always bring a really high quality product, and we try to be great landlords, and and these are our partners. They're helping, they have giving them a place to live, and and so we always have really fast turnaround. And I give
Yes,
grace to God. He brings the renters and the buyers and all this stuff. He's
that's
more
right.
frequently being in the renters than obviously in
Yes.
this case the buyers, but we trust in the timing.
Yes, credit to God. We pray over all of our listings.
Hmm.
I'm there. The moment I put the sign on the ground saying our prayers that God will bring the right people.
Hmm.
And to finish off today, if you are thinking of doing a remodel, you're not sure the value that will bring to your property, get in touch with us through the links below. We are here to support you every step of this decision making process. And if you have homes to list it for rent, know that this is one of our specialties. Yes, an average of 10 days for all the properties I've listed to date. We will find a renter. The property will be impeccable before it gets somebody walking in the door. And with this particular property, we're going to tell you all about the next episode. We're going to tell you all about in the next episode. And yes, not even been in the market officially yet. And we already have people who applied to it because it's a personality too. It has to be good quality
Well,
and the attention to details. And I
yeah, it's
believe
your
that really
systems.
pays off. And extremely clean. Brazilian way has to smell good. The moment they walk in, they say,
I
"This
think,
is my home."
yeah, and I think the systems that we built to prepare and have the properties ready to show and do those things, those systems that you have are very um, are like good lessons learned for a lot of people. So,
That's right. It's the J&R Touches. Thank you so much for watching. We'll see you on the next episode.